Do like us.
Comment on our video.
And subscribe our YouTube channel.
MahendraGuru.com.
The Brahmast for success.
Your success is our success.
Hello and welcome to MahendraGuru.com, the Brahmas for Success, and you're watching The End of Confusion. Today's topic in the General Awareness section is Indian Banking History Part 2. In the earlier video, we discussed about the Part 1, the Phase 1 of the history of banks, and now we present to you the Part 2 of the Indian banking history. Before starting the video, it's a request from our side to subscribe our YouTube channel and also download a Mahendra's app, that is a new Mahendra's app that consists of not only the Mahendra's features but also of the Mahendra Guru features. Without further ado, let's see what we have in store in the phase 2 of Indian banking history. Now, till 1911, there were various banks: Central Bank of India, Oudh Bank, Allahabad Bank, for example, Bank of Baroda. So there were various banks which were acting in a certain manner. Now, in the early 1910s and the late 1918s, there was a particular motive that the entire world economy, the entire world was under the fear of the World War I. That led to a lot of damage to all the banks in India, more than 100 banks in the entire world. Now, that is that particular period, and if I may just quote that particular period, from 1913 to 1918, that particular period was the black age of the Indian banks, because various banks, not only the General Bank of India, that was the biggest bank before the Imperial Bank, that was bankrupt, and other banks also fled because of that humongous weak period of economy. Now, these things changed in 1921 when three banks, yes, the Presidency Bank of Bengal, the Presidency Bank of Bombay and the Presidency Bank of Madras, these three were merged and we had a big bank called as the Imperial Bank of India, that we will discuss later, became the State Bank of India. Now, the commission, the moment that changed the entire scenario, the entire picture of the banking structure in India was in 1926, when there was a commission that was called as the Hilton Young Commission, that was known as the Royal Commission on Currency and Finance. Now, this particular commission was given a task to review the banking scenario. Now, in this particular commission, there was a very famous Indian who presented a presentation based on the problem of the rupee. On the recommendations of that particular great Indian, the Hilton Young Commission decided that they would go forward with the change in the banking structure. Friends, that particular person is or was Bhim Rao Ambedkar, the father of the Indian Constitution, who was instrumental in providing the basic idea about what to be the structure, what to be a centralized structure of the Indian banking system. So, after long debates and discussions, on 1st April 1935, friends, Reserve Bank of India was established in Calcutta. Yes, till 1937 it was in Calcutta, and after that it was shifted to the current headquarters, that is Mumbai. Now, the big thing happened that we discussed in the phase 3 was that RBI was nationalized, and after independence it was declared the Central Bank of India. So far on slide 1 we have three important points. Number 1, that the period in the 1913s to 1918s was the dark age period of India, of the Indian banking. Things changed in 1921 when three banks merged to form the Imperial Bank of India. Then the big commission that was instrumental in setting up the RBI, Hilton Young Commission, was formed, and it provided the suggestions, and on 1st April 1935 RBI was born, and it was nationalized after the independence. Moving forward, and this is a pretty tricky question and a pretty tricky topic, yes, SBI and nationalization. Various people have this whim, various people have this doubt that whether SBI is a nationalized bank. SBI, and I would categorically state, SBI is not a nationalized bank, it is a public sector bank. If we discuss about the history of SBI and the nationalization of banks, the evolution of State Bank of India can be traced back to the first decade of the 19th century. We've discussed that the Bank of Calcutta, known as the Bank of Bengal, that was formed on 2nd June 1806, was the first step towards the later State Bank of India. The second step was 2 years back, after that particular formation, that Calcutta was renamed as Bank of Bengal. That led to two other banks, Bank of Bombay on 15th 15th April 1840 and Bank of Madras on 1st July 1843, leading to the three presidency banks in India. These three banks dominated the entire banking scenario, and on 27th January 1921 they were merged to form the Imperial Bank of India. This we know. Let's discuss what transpired after this. After this, the government the government decided that they have to move forward with the entire structure. After the independence, there was a particular emotion that every bank that is in India should be under the government structure or the RBI structure. That led to a specific word called as nationalization. They tried to do it with SBI by forming the SBI in 1955 by renaming the Imperial Bank of India, but that particular event is not called a nationalization because that is governed by a separate act, and also the basic motive, the basic emotion behind the nationalization was not taken care of while acquiring the State Bank of India. Remember that nationalization has only happened twice, and SBI is not a part of the nationalized banks. Then the question arises, then what is or what are the nationalized banks? Now the government decided that in order to have the biggest amount of capital for public welfare, for doing separate features, separate yojanas, they want to have certain big banks under their direct purview. For that particular concern, they decided to nationalize 14 major commercial banks on 19th July 1969. The condition: all the commercial banks with a deposit base of over rupees 50 crore were eligible and they were nationalized. It was considered that banks were controlled by business houses and thus failed in catering to the credit needs of poor sections such as cottage industry, village industry, farmers, craftsmen, etc. Thereby, it led to the first phase, that too under the Indira Gandhi regime, that was on 19th July 1969, and 14 banks were nationalized. The second dose, that is the second phase, was done on 15th April 1980 when 6 other banks were nationalized to form 20 nationalized banks, and today we have around 19 nationalized banks. I'll again reiterate, SBI is not a nationalized bank, it is a public sector bank. Now the question could also arise that what is the difference between a nationalized bank and a public sector bank? Any bank that has at least 51% of the government stake, that particular bank would be a public sector bank, and that could be a nationalized bank. But for a nationalized bank, they have to get nationalized in the two phases. That is the first phase, that is in 1969, and the second phase in 1980. The reason behind this is that there was a certain aim and a certain motion behind nationalizing banks. For example, social welfare, controlling private monopolies, expansion of banking, regional imbalance, PSL, and banking habits. These were the particular aims for nationalizing the banks. Social welfare, for example, various banks were under the private corporate houses. They wanted to acquire so that they could use the money for welfare. Controlling private monopolies, because if a particular person is of the purview that he wants to get profit, he is least concerned about the profit of the customers. Moving forward, expansion of banking. Now, if the government has the upper control, it could form branches of that particular bank in the suburban and the rural areas. Regional imbalance. Now, Mumbai, Calcutta, Delhi, they had certain people who were rich, they had banks which were fruitful. But for cities like in the interiors of the country, those cities or those sectors were not getting proper funding. That also led to nationalization. And the PSL, priority sector lending to those sectors that are not provided timely credit, that are not provided credit in a timely manner. For that also, and also banking habits. Every particular person should be under the banking umbrella, thereby securing their money and also investing in the economy of the country. So these were the aim that led to the nationalization of banks in 1969 and 1980. But if there are pros, there also are cons concerning this particular event that are called the limitations. Number one, inadequate banking facilities. Now, India is perhaps one of the biggest countries in the world with the second biggest population. Now, for that country to have the banking facilities, it is a miraculous or Herculean task to provide so. So, initially, it led to inadequacy in providing the banking facilities. Number two, limited resources mobilized and allocated. Now, since India is a developing country and was a developing developing country, there were not adequate funds to provide to provide everybody with the required funding. Lowered efficiency and profits. Of course, if every big bank is under the government umbrella, the competition would decrease because every bank would be similar to the other bank. But if the bank is a private commercial bank, that particular bank would ensure that it is better than the other bank, thereby increasing the efficiency and profits, increase expenditure. Again, if you want to carve out a nationwide yojana, the expenditure would increase. Political and administrative inference and lack of uniqueness. Now the second last part, again, the government, and this has been the trade, that undue interference by the politicians has led to doom in different yojanas, and this particular venture, that was nationalization, was nothing dissimilar. And last, lack of uniqueness. If every bank is a nationalized bank, if every big bank is a nationalized bank, the competition would not be there, and there would not be a special feature for a particular bank because every bank would have the same feature. So this was our discussion on the phase 2 of the Indian banking industry. We would club the RBI and the phase 3 in the next video that would be uploaded in this week itself. We hope that you've loved the video. Do like us, comment and share videos, and subscribe our YouTube channel. Your success is our success. Thank you so much.